Turning now to business news, markets trade higher on Friday on a disappointing jobs report. Africa 54 business correspondent Jill Malandrino reports from the NASDAQ.
Good evening from the NASDAQ market site. As we can see, all three of the major U.S. averages opened up higher across the board, just over 0.5%, as traders in the U.S. figure out what's going to happen with this employment number that we got this morning. That's a key piece of data that the Federal Reserve is taking into account before deciding whether or not we're going to take interest rates up. And that's really what the issue is with global central banks around the world, trying to understand how to handle sluggish growth. And as such, they remain data dependent when establishing monetary policy. The employment report this morning showed that 151,000 jobs were created in August, and the employment rate was at 4.9% versus expectations of 180,000 jobs and an unemployment rate of 4.8%. Recall, the Fed has made it expressly clear that the labor data is the most important piece that it will be taking into account. Now, momentum has faded in U.S. stocks after a rally added almost $4 trillion to U.S. equity values from the February bottom. Since a slew of all-time highs ended a 14-month drought in mid-July, the S&P has been stuck in neutral and mixed economic reports and speculation over the timing of the next Fed rate increase. So traders are looking for some type of volatility to get back into the markets to make us move to the up or downside. Liquidity is quite tight, volume has been anemic, and that makes it tough for traders to establish positions. So outside of the Fed, the U.S. dollar in our national election could have an impact on the market. A higher dollar has a global impact on trade balances in the consumer, and I think that's what the biggest issue is when looking at the impact to Africa, since it is a net importer of goods. We're also keeping an eye on the OPEC meeting in the next few weeks, but nothing came out of the April meeting, so expectations are very low that anything meaningful in terms of production cuts and supply-demand balance will come out of that. So what does September historically hold in store for the markets? According to LPL research, September is historically the worst month for the S&P 500. But should you worry about a big drop in September? Sure, anything is possible, but the majority of the largest September drops took place when the market was weak heading into the month. The good news is the trend in 2016 heading to September has been rather strong. For Africa 54, I'm Jill Malandrino from the NASDAQ market site. Have a good weekend.